Hello, everybody. We're live with a real estate market update for Reno Sparks for October. It's actually data from January 2020 through the end of September 2020. And couple of disclaimers. First of all, this is for the greater Reno Sparks area only. This includes north areas like Spanish Springs, East Sparks, also out to north valleys, including Cold Spring, Stead, Golden Valley, Lemon Valley. Goes all the way south of town, including Pleasant Valley, Washoe Valley, East Washoe Valley, of course, DeMonte Ranch, Galena, that whole area, all the way out to um, let's see, Verdi, Mogul, Somerset, etc. Does not include Fernley, Fallon, and some of the outlying areas. Now, this is for single-family residential homes only. We do not include condominiums. It's a fairly small segment of the market, so we just want to give you a general overview. Now, before we get started, understand that this is a general, like, high-level overview of just sales trends and where things are actually headed and where we've been this year. If you'd like more information on your particular property and would like a more detailed analysis of what your home may actually sell for, maybe you're thinking about refi selling your home, maybe you're looking at buying a home and would like evaluation, don't hesitate to let us know. You can reach us at our offices. 688-6060 is a phone number. You can DM us right here on this Facebook business page. And for those of you watching on other video platforms, you can email us as well. It's info@4renohomes.com. So let's dive in, get started real quickly. So through September, I know a lot of headlines come in on the median home price. It's actually dropped slightly to $440,000 even. That's down just a little over 1% from last month, and it's actually up though 11.4% over the same period last year. So year over year, it was 395 last year. This year, it's 440,000 even. Now, if you look at the number of closed sales, 680 for the month of September, which was actually pretty good. It's up slightly from the prior period, which was 655, and it's up significantly, it's up 17.4% from the 579 last year at this time, or in September of 2019. Now let's look at the closed by price. We did the closed by overall close, but if you can look at the price range here, this is what's interesting is really under 200 there's not much. 200 to 300, just over 25 sales, and then just over 200 sales for 300 to 400, and then you have 4 to 5 here, just under 200, and then of course it starts to fall off after that. So now here's where the story gets interesting. This is the number of actives currently for September 2020, or the number that were active in September 2020, I should say. Down 22.5% from the previous month, and down a whopping 66.2% from this time last year, where there was 1,422 active homes on the market. So pretty significant decline. And actually what's really interesting, if you come back here and you see this is 2019, so the beginning of 2020, and not to be Captain Obvious here, but it's been a very strange year, 2020, given the pandemic and a lot of other factors. And you can see normally what you see early part of the year is inventory and active listings start to build before they level off and come back down, and so on. And you can see that trend play out over and over again. Well, we started on that normal trend until roughly March, April, which is when the pandemic hit, and it's been on a slow decline ever since, and it fell off the map essentially in July, August, and of course into September. So very significant decline. It's something we're definitely keeping an eye on. Now, if you look at active by price, what's interesting is if I go over the closed by price and then you go back over to the active by price, you can see there's very few actives here, and you can see all of the actives. If you start to get up about 500 plus, the actives start to climb, and you have a significant amount of actives. But if I go over to here to close by price, you have very few closings. So if you really break down the inventory numbers, it's even more of a disparity than it actually looks, because you don't get a lot of closed sales in these upper end price range, which makes sense, right? I mean, the higher you get in price, the less people can afford these higher priced homes, so you get less closings, but you have active inventory building over here. If you go back into the price ranges that actually sell, there's only less than 80, barely 70, and then up to 300, there's roughly 20 on the market. And then over here, you've got way more sales or listings over here. So if you add up the listings over here compared to the more affordable price ranges, it's significantly higher. Now, the absorption rate, all the absorption rate is basically if we kept on a sales pace, a monthly average sales pace, how long would it take to sell through the current inventory on the market? Now, normally you like to see roughly at least, 2.5, 3 months, but if you've watched our or participated in our market reviews in the past, you know that inventory has been an issue for the last couple of 3 or 4 years, and it's even more pronounced now. And so you can see the absorption rate is zero point 0.7, so less than a month of inventory if we continue to sell through. So there's just no inventory on the market. Now, what I find interesting is one of the biggest driving factors, as you may have heard me say in the past, if you've been on these before, and if you haven't, interest rates are one of the biggest driving factors for real estate sales. And actually, if you go back to 2019, late 2018, early 2019, interest rates were right over 4.5%. And of course, they slowly dropped before they leveled off late 2019. And of course, we were a little bit lower in 2020 and they started to tick up. But guess what this is right here? You guessed it, the pandemic in March and April. And of course, the government came in with stimulus. They lowered interest rates. The Federal Reserve lowered interest rates and started participating in the bond market and mortgage-backed securities and so on to drive interest rates down until we have incredibly low, record low interest rates. I mean, amazing interest rates. If you're the refi market has been on fire, but it's also driven home sales. And if I go back to the closed number of sales, you can actually see here normally what we have is the beginning of the year in January you start to see listings start to build and sales usually follow about a month behind until you have a peak sometime usually in May, June, maybe into July before you have a little bit of a pullback, and then you have kind of a fall sort of a rush before it really slows down again for January. And that's kind of the cycle. You can see it play out over and over again here, but of course it's been disrupted given COVID here. You can see we started right here up until March, and it should have kind of went on a straight line here, and unfortunately given the pandemic everything pretty much shut down, so you had number of sales and inventory drop here in April and May, which is traditionally when it would take off. And of course, it took off after that. So we kind of had this pent up demand in here that kind of sprung loose and it gave us this. And I think we've sold through all that inventory. So the biggest question on people's mind is, where is the market going? Are prices going up? Are we in a bubble? Well, unfortunately, I wish I had more specific answers, but the reality is nobody really knows. But what can I tell you this is, as long as interest rates stay low, I think you're going to see a very strong, robust real estate market. I've said this many times before. I don't think we're in a bubble. That doesn't mean that prices can't soften and come down a bit as inventory builds, as maybe more rental units and things like that come on the market. You could see prices soften. As a matter of fact, they usually soften in the wintertime anyways. But this run up has been based on a lack of inventory. So you've got high demand, lack of inventory, which has driven prices. You have a lot of buyer demand based on interest rates, as I mentioned before. So, this isn't speculation. This isn't people buying 4 and 5 houses and flipping houses and like it was back in 2007, 8, 9. Now, I think the bigger trend to watch, and I think one of the reasons we're starting to see active inventory fall off here is I think people have a wait and see attitude. Of course, we have winter approaching again. I know some people are worried about maybe a resurgence of the pandemic. Of course, we have a very contentious election happening right now, and the election is going to happen in less than a month. We are going to have a presidential election, and I think a lot of people kind of want to wait and see what happens with the election, what happens with the pandemic, and what the future is going to hold for 2021 and beyond. So it feels like we have this wait and see attitude. So then the question remains, should you sell your house now or should you wait? Well, it's tough to make a blanket statement because every situation is different, and I can't say across the board, yes, it's the best time to sell or yes, it's the time to buy, without talking with you first or having you talk to one of our agents to get your story. But I will say this, if you are thinking about selling, look at the active inventory. There's not a whole lot of competition out there. So if you are going to be selling very soon, now would be the time to do it, right? Because the market generally slows down anyways going into November, December, and January. So you still have a good month or so of really good market time, and there's not a lot of competition out there. People are getting really good prices for their properties. If you're going to buy, again, it's all relative to your situation. If you want to wait until get through the winter and maybe look at buying in the spring, you may have more selection and options. That's of course a possibility, but there's a bit of economic uncertainty. Will interest rates stay low? I do expect, and the industry expects them to stay low for an extended period of time, but that's not you can't always count on that. Will inventory be even tighter next year? I don't know. I can't imagine it will be. So I think it's based on your needs. If you can find a house that fits your needs, that you like, that's within your budget, interest rates are extremely low, you can lock them in now, have a good place to live. Um, or, if you have time to wait and you don't need a property right now, that's certainly an option as well. But in any event, I hope you enjoyed our overview of the Reno Sparks real estate market. And as I said, if you would like more information and more specifics about your individual property, we're happy to help. You can visit us on our website at 4, that's the number 4, RENO homes.com. And you can also DM us and message us right here through Facebook. And our phone number is 688 6060. Thanks for joining us. Have a great night, everybody. We'll talk to you soon. Bye bye.